All right. Hello, everybody. Welcome back to another episode of The Market Open. We are here. We are live. It is Monday, June 17th, 8:46 a.m. Back on another Monday morning. We've got about 2 weeks left until July. So we'll be into the 7th month of the year. We're halfway done through June, which is absolutely insane. But we are here. And we've got a market open to do as we get closer to the end of June. I hope everyone had a good weekend, a good Father's Day weekend as well for those who took some time to spend with their dads, with their pops, with their fathers over the weekend. Honestly, we didn't do anything that crazy other than we went to a restaurant. And unfortunately, the restaurant kind of sucked. Like we had one of those experiences where you go to a restaurant, it was a buffet, and it's just not a good restaurant. It was overpriced. It was not good. It just wasn't the best eating experience, quite frankly. So at least we learned a lesson to never go to the place that we went to. But yeah, it wasn't the best lunch we had, but overall, still a really good day and really good time celebrating a Father's Day. Hope everyone had a good day as well. This is a post I made on Twitter for Father's Day. I want to share with you guys here before we get started. So this is me and my pops. This is when I think this was in DC. This was we went to go view the White House. And I think this was 2001. So I was about 4 years old here. And basically I wrote that, dad worked at a gas station until he saved enough to start his own liquor store, a very traditional Indian American story. Once he started that store in 1999, worked 6 days a week, 10 hours a day for 15 years. And I said, probably, I had this realization over the weekend. Probably the only reason I love business so much is because at 8 years old, I was ringing up customers for their lottery tickets, their booze, and their cigarettes. And so I saw what adult life looks like at a young age. It's you buy some hope, you buy some smokes, and you buy some alcohol, and that's how you numb the pain. And so it's kind of funny because as much as my dad wanted me to go corporate, and I think my dad still sometimes wishes I went corporate, I think deep down he knows that he put the entrepreneur bug in me at a very young age. Like at a really, really young. I mean, at this age right here, I saw him operating his liquor store. And then like 5 years later, I was ringing up customers. And I knew that we were buying the cigarettes in wholesale, selling them individually, or buying up the alcohol wholesale, selling it individually, which is why we were making a profit. So sort of those basic tenets of business of like buy low, sell high, I got to see at a younger age. And so my dad's going to be the greatest entrepreneur in my eyes always because he introduced me to the world of business and got this get it done yourself, never complain mentality for a long time. Amit's on dad's payroll since 8 for taxes. My dad never paid me for it, but that's just how immigrant businesses are, right? Like you don't get fucking paid for doing this work. Your payment is the fact that you have a house over your head and some food on the table. But yeah, it was a fun Father's Day. Hopefully you guys all enjoyed. And we got a lot to get into for the market open. And now, there's a lot to talk about. There is a lot to talk about today on the market open. We got to talk about a bunch of things Elon Musk said over the weekend. We got to talk about this new article that came out about TikTok traders and how they're using astrology to invest. I thought this was hilarious. So we're going to be talking about that. Shout out to Chris. He sent me this article and I was like, all right, we got to cover this. This was hilarious. But the headline news of the day, and that's what we're going to get started with on the market open, is bears turning into bulls. Bears turning into bulls. So let's get started with this topic right here because we don't only have a couple of people kind of turning their tune on the market. It's multiple banks and institutions basically saying, hey, this is a big rally and we think it's 1999, not 2001, which is why this is getting pretty excited. So I want to start off by sharing Evercore. Evercore ISI is one of the institutions that had one of the most bearish strategists. I believe his name is Julian on the street. Here's what he said. They updated their price target from 47.50 to 6,000. 47.50 to 6,000. Tom says, great Father's Day story. It's September in Australia. Oh, wow. Australia has Father's Day in September. Yeah, let me know if you're around the world because I know other places have, I think Italy has Father's Day in like April or something. So it is different around the world. But yeah, let me know if you guys have it in different spaces. Okay, so Evercore ISI raise S&P 500 target to 6,000. The AI revolution is in the early innings. It's like they took out a page of Dan Ives' book. Let's hear what they say. The pandemic changed everything. Record stimulus, elevated cash balances, and low leverage support the consumer. Then came AI. Today's Gen AI potential in every job and sector is inflecting. The backdrop of slowing inflation, which we saw all of last week. We have massive slowing inflation across CPI and PPI. A Fed intent on cutting rates. We know the Fed wants to cut rates. And growing support for Goldilocks, the Goldilocks zone being low inflation, increased growth. We raised our year-end 2024 S&P price target to 6,000 from 4,750. It's a hell of a jump. Following 0% growth in 2023, 2024 EPS goes to 238 and 2025 EPS to 251. That's on the S&P. So 251 on the S&P from up from 243, implying 8% and 5% EPS growth respectively. S&P to 6,000 by year end on a 238 EPS applies a 25x trailing PE multiple, extended on a historical basis, but short on the 28x Y2K peak, meaning that the S&P currently, if it goes to 2,000, or sorry, if it goes to 6,000, it will have a 25x trailing PE multiple on top of $238 earnings per share. That is 3x short the 28 Y2K peak back in 2000. Or it's three numbers less, right? 28 to 25, which is significant. And they also say 7,000 is possible by the end of 2025. I mean, goodness gracious, you talk about a bear that turns into a bull. I don't think anyone expected Evercore, which historically, I mean, the whole firm hasn't been bullish, but some of their top market strategists have been bullish. They're saying, no, the AI revolution is just starting. We think 7,000 S&P is possible by end of 2025. And we think 6,000 is possible by the end of this year. Now, it's not just them. Goldman Sachs comes out. They say we raised the target on the S&P to 5,600 from 5,200. So that's a 10% bump, which is pretty damn incredible. And here's what they say. We think this year has 1995 flavor to it. Again, Dan Ives has been kind of harping on this for a long time. 1995 was the last soft landing. The Fed cut from 600 basis points to 525 basis points. The S&P made 77 all-time highs, and that was just the appetizer with the epic run through 1999, 4 years later. Year to date, S&P 500 has already had 29 all-time high closes, which is, I mean, if that doesn't say we're in a market that wants to go higher, I don't know what does. And it's had the best start ever to an election year. So this is what the 1995 chart looks like. And this is where you got the S&P chart kind of matching it. You saw that one dip. This was here when Nvidia fell to, what was it, like 700-ish? So we had a little bit of a dip, and Nvidia fell 10% in a day, and that was like the majority of the correction we had. I think the S&P also fell. This was when Israel and Iran were going at it. S&P fell to like 492, and then since then we never looked back, and we just aimed higher. And again, the earnings growth from Oracle, Adobe, Broadcom, which is looking like it's going to become the next Nvidia or something, given how it's performing. I mean, the numbers have obviously justified the growth, and it looks like that's what's happening right now in the broader market. Now, someone here says these banks and analysts change tune in a second. All of this is noise. So I agree. I mean, look, the banks will say whatever the banks need to say to talk up their book. The analysts will say whatever they need to say to also be able to, fit with the sign of the times. I mean, if you've been bearish for 5 months, it's really hard to justify to your clients that you continue to be bearish when everything is going up. However, the logic that they're making is backed by a lot of the data, not only in earnings growth, but also obviously inflation that's starting to come, disinflation we're starting to see in terms of inflation coming down. And you can make the argument that the logical reasoning for a bear case, while there is logic out there, there's always logic out there, it's hard to see the majority of the market say, you know what, we're done with Nvidia, we're done with Microsoft. Dan Ives raised his price targets for Microsoft to 550. We'll talk about that in a second. And we're done with these companies that are obviously producing results. AWS at $100 billion trailing 12 months business. I mean, at some point, you realize that the market just wants to continue to bet on these companies, and not just bet on them for 2024. It doesn't look like Microsoft or Amazon are slowing down for the next couple of years. And, Deepwater's argument has been that there's an AI infrastructure build that takes several years to complete, just like the internet took several years to complete. You had some losers there, but you had some really big winners during that time. And that was from 1995 to 1999, and then 2000, everything fell. If 2024 is 1999 or 2023 was 1999 and we're only in, 1995 and we're only in 1996 and we got 3 years left of this, I don't know if people can afford to miss out on 3 years of massive growth, given what we're seeing is happening in the AI sector. So I think it's a good news for bulls. It is a little scary because it kind of feels like, all right, when the street gets this bullish, maybe we're reaching a top. But again, and we talked about this a lot last week on the Market Open, we had Liz Young who was talking about how she's bullish as well. It's hard to see where the top is when results keep coming in that prove that we're not at a top. And quite frankly, the fear and greed index is also showing this as well. I mean, this was absolutely incredible what I saw last night. And I've been seeing this for the past couple of days, but yesterday I really couldn't believe it. Futures showed that the fear and greed index is at 38, which is fear. That's not greed, that's fear. And the S&P is at all-time highs. QQQ, NASDAQ, all-time highs. Why is the NASDAQ, why is the S&P 500 at all-time highs, but the market is signaling fear? I think, and this goes back to the thesis we talked about on this new play that I didn't get filled at, by the way. I'm going to try to get filled again on this play, on IWM, which is that the market breadth has not expanded to a majority of stocks. I mean, quite frankly, the S&P 500, 33% of the gains in the S&P 500 has come because of Nvidia. That's why Nvidia is so important. That's why I think these bank strategists are like leaning into Nvidia, because they realize if Nvidia is gone, the whole market's gone. And so they're trying to justify the case for why Nvidia is the real deal. IWM is down in the pre-market and it's flat for the year. I mean, S&P is up 14%. QQQ, I think, is up like close to 20%, 24%. IWM is flat. A lot of other companies are flat. So the concentration of the market, I think, is what's creating the fear in the futures, or just in the broader market, because the argument is that we have so much more room to expand and grow that why should we be afraid of this market, even if the S&P is at all-time highs? Maybe it stays flat, or maybe it goes up a little higher, but the rest of the market can still do well. On top of that, we obviously saw really good inflation data coming in. So if we know disinflation is going to be the trend, then yeah, we should still be in fear, because once we get that first rate cut, there is a lot more potential and a lot more room to run. Neil Kashkari, one of the Fed presidents, he was on Meet the Press on Sunday. And when I heard him talk, quite frankly, he did not sound hawkish. Now, he reiterated the same thing the Fed said on Tuesday on the FOMC meeting, which is that they expect one rate cut and they expect it to be toward the end of the year. But he didn't say it with the kind of tone he usually talks about, how inflation is super sticky and we need to keep raising rates. He kind of said, well, we do see the economy cooling, which is good, because that means there's a precedent to cut rates, given that jobs are starting to not be as in demand as they were before. And he says we're going to be data dependent. And I know that's what the Fed always says, but if the data shows, which it seems to show, that inflation is coming off and 3.2 on CPI is probably going to get to 2.9 in the next 2 months, that the Fed will act in the way that they need to act, which is raising or cutting rates. And if that happens soon, the market's going to like it. So I think the headline for today's show is that bears are turning into bulls. And either that's a top signal, or that's a holy crap, this is going to be an incredible market and we're just getting started signal. And I kind of think it's the latter, just given the fact that the market has started to, the market has started to realize that AI is real. And if inflation's coming down, that's only going to accelerate the rise of AI as well. Let's get Tom Lee's thoughts on Friday in terms of what he thought was going to happen with inflation, and then we'll keep going from there.
Your big investor note today, and you said inflation seems to be falling like a rock. Why do you say that? And is that necessarily good news for stocks?
Well, the reason we said that is there seems to be some skepticism from our clients about the quality of that May CPI report, which came out Wednesday, and the May PPI report, which came out Thursday, because it was such an abrupt decline in the rate of inflation from April to May. But the internals were actually much better than people realize. Over 55% of CPI components are now below their pre-pandemic average. That means a lot of the sort of drivers for inflation are actually falling away. And in terms of what it means for markets, you're right. You don't want to be in a deflationary scenario, which it's really not happening. Inflation is still in the high twos, but it's moving faster towards a target than the Fed realizes. That actually is somewhat constructive.
Well, can you blame your clients from wanting to see maybe a couple of months of proof? Because every jobs number has been basically revised the other way. You get all this crazy, noisy data between the employment survey and the household survey. Nobody can seem to figure it out. I don't think it's a bad thing to get a couple months confirmation rather than get all joyful because, used car prices might have fallen a little bit.
Yeah, I mean, that's a great point. I think one thing that maybe investors are starting to have some tension with is this idea of data dependence, because, markets want policymakers to be somewhat forward-looking. And the idea that we're just looking at these backwards inflation reports and then judging what inflation's doing, it does create a lot of tension and, obviously a lot of uncertainty in bond markets. That's why, rates markets have really had a hard time making heads or tails of this.
I posted this to X. Tom, I don't know if you had a chance to see it before you came on, and I was just showing the divergence between the Dow and the NASDAQ. I know nobody cares about the Dow. It's just more like a media index. But the way the NASDAQ keeps going up, the Dow is actually down recently. Over half its stocks are down in the past 3 months. There's the chart. Thank you, guys. And actually 273 of the S&P 500 are actually lower over the last 90 days, Tom, even as we make record highs.
Which is kind of crazy. Basically, half of the S&P 500 companies, 273, are not performing over the past 3 months. And that signals, again, a lot of market concentration into the biggest names.
Are you worried at all about just this? I know we've talked about it before, but this massive concentration at the top and so many companies that are just not participating.
Well, yeah, I think it's probably one of the sort of fly in the ointments, or one of the things that's getting investors nervous, is that it would be better to see better breadth. And of course, I'd love to see the Dow keeping up with the NASDAQ. I think part of this is that monetary policy sort of having hawkish pauses, and the idea that the Fed, is still keeping on the table the potential for hikes.
Yep.
Means it's really hard for stocks to break out, because at the end of the day, CEOs have to say, well, if the Fed's going to be raising rates, I'm going to stay cautious, and that's what's keeping stocks cautious.
And again, that's a fair point, right? If CEOs are thinking the Fed's going to raise rates, or they have any inkling that the Fed's not going to cut rates anytime soon. I mean, we're seeing this with SoFi. I see a lot of you guys talking about SoFi in the chat. SoFi is guided very conservatively because they don't believe the Fed is necessarily going to be on their side towards the rest of the year. They feel unemployment's going to be closer to 5%. So like they feel that they should not be lending out as many loans as they would traditionally in a regular market cycle, because what if those loans go delinquent, or people can't pay back their credit because of the fact that we're getting into a recession. So one of the reasons SoFi's EPS estimates have been relatively subpar is because they're guiding to be so conservative. And that might change, but that's an argument Tom Lee's making for why the market is also getting a little afraid, because until we see a confirmation of a rate cut, it's going to be very hard for that breadth to continue to widen out. And again, why is that rate cut good? Small caps, companies that don't have $100 billion in cash like Apple, they need to borrow money. They need to finance their operations. The cost of capital needs to come down for them, not only to survive, but for them to increase their earnings growth. And in order for that to happen, you need that rate cut, which begs the question, is inflation coming down enough to set the precedent for a rate cut? Tom Lee thinks it's the case. JP Morgan thinks it's the case. Bank of America thinks this is the case. Goldman Sachs thinks it's the case. Evercore today thinks it's the case. Maybe that ends up actually being the case. One final thing on this, and then we'll move on. JP Morgan, they shared this as well. And this was really interesting. So while we had thought the market was setting up for a pullback based upon the price action during the earnings season, narrowing breadth reduced HF positioning and the potential for markets to take some profits given the almost 32% gain in the SPX since the bull run began in October 2023. This has not come to fruition, and the near-term market setup points to another leg higher being more probable than a pullback. The macro data suggests that should support this hypothesis given into a seasonally strong July. And so, I mean, you got JP Morgan, which has historically been incredibly bearish. They've had, I think, 4,200 price target on the S&P throughout, honestly, since 2023. Their argument is like, well, it does seem like at some point you have to throw in the towel, right? At some point you cannot keep being the boy who cried wolf, because if the wolf never comes, just no one believes you. And these guys, JP Morgan, Goldman Sachs, they have way too much money from their clients to be wrong for this long, right? The whole point of why they're getting paid is because they're supposed to at least somewhat be correct on where the markets are going. So you're going to see a lot of this capitulation. And again, I will call BS on this entire JP Morgan, Goldman Sachs, Evercore kind of pivot when I think there's some data in the underlying economy that is so bad it delegitimizes, either through an earnings perspective or a macro perspective via inflation, the thesis for the market to go higher and for people to want to buy the market. I don't see any of that data yet. And so it's really hard to say that these guys aren't just capitulating, or these guys are calling a top to the market, because I don't think they're calling a top to the market right now. So that's what we got in the context of the macro. Josh says eventually there are no more buyers, though. Well, again, this goes to another thing that we've got on our side as a tailwind. If you're a bull, $6 trillion in money market funds. And again, we did some research last week when the S&P rallied 27% in 2009, $500 billion left money market funds. There's actually a good chart. I don't know if I have it saved, but there was a great chart showing money market from 2010 to 2021. Money market funds were at $2 trillion. Like if you look at the chart, like here it is. I got it. I mean, it barely increased, right? So look at this right here. 2007, we had about 2.5 trillion. Then we got all the way to 4 trillion in January 2009. This is right after, in the midst of the recession. Then, as you can see, the S&P, the chart's not here, but the S&P went up 27% in 2009. Money market funds lost in the next 3 years about 2 trillion. And then from 2011 to 2020, basically stayed flat, stayed right at under 3 trillion, a little bit above 3 trillion. Then we had a lot of money printing, right? 2020, it spikes up to what, 4.5 trillion. And then June 2024, now we're at 6.1 trillion. 6.1 trillion is not normal. Eventually that money will leave the funds, especially when they're not getting 5.5% on that money for risk-free. So when that money leaves, I think the answer to where are the buyers are stuck in money markets, and they're going to come. It's just a question of when the macro is going to make it easy for them to decide to leave. And that's going to be when the Fed cuts rates. And we'll see what happens then. Good morning, mate. What's your reason for Robinhood's pullback in your opinion? And what are your predictions for the week? There is one reason for Robinhood's pullback, in my opinion. Pullback, I think it fell from like 24.20 to might hit 21.90 this morning. And that is because of Bitcoin. This thing is emotional. It is acting like it's scared to move on from 70,000. And for some reason at 70,000, either the market makers or retail or institutional fund, I don't know who's selling, but someone's selling. And the reason why Robinhood's down, the reason why a lot of crypto stocks are down is because Bitcoin. I mean, look, Robinhood's not pegged to Bitcoin as much as it was in the past, but if Bitcoin falls from 70 to 65, it's going to be tough for a company like Robinhood that is associated with Bitcoin to not also fall with it. Now, one of the things about Bitcoin that was interesting is that last week or 2 weeks ago, when I was in California and I was looking at the ETF inflows, they had almost 2 billion in ETF inflows. One day they had 886 million. The other day they had 486 million in 2 days alone. Last week, they lost $581 million. I don't think retail sold $500 million worth of Bitcoin. I don't think that's the case. I think it has to be institutional, or it has to be manipulation from market makers. And quite frankly, I think it's more so manipulation from market makers. I think a lot of them are trying to get out the weak hands before the real bull rally happens closer to the end of summer after we get rate cuts. But I could be wrong on that. I just, and granted, it's hard to complain because, I mean, if you look at it year to date, it has had a phenomenal run, right? I mean, Bitcoin has gone from 38,000 in the beginning of January, end of January, all the way to 73. Now it's at 65. So it's run. Like we're being really greedy asking it to run more. It's just, people didn't really buy at 38,000. They bought it around 55, 60,000, and now they're expecting it to run. The halving event did happen. That should be bullish for Bitcoin. And on top of that, historically, I think it's like 12 months after the halving event, Bitcoin tends to double. And so we're not even close to 12 months after that. So maybe it takes some time to get there. Bernstein did raise their price targets to 200,000 on Friday. So the firms that are bullish on Bitcoin, they have not changed their bullish attitude. MicroStrategy is going to be buying $700 million worth of Bitcoin with an additional 100 million potential that they can use. They upped it 40% from 500 million a couple of weeks ago that they disclosed. So lots of money still has to come into Bitcoin. But as of now, I think this is one of the main reasons why Robinhood is down as well. Douglas says, dude, Robinhood is down from 24 to 21 because it's up from 8 and 7 months. That's another reason. I mean, people are probably taking profits on Robinhood. It's up from $8 to $24, full 3x. Likely going to have some short-term pain. But in terms of the technical reasons I think it's down, I think Bitcoin is like a reason the algorithms are just selling it off a little bit more as well. ARK sold a portion of their HOOD. Yeah, guys, remember when ARK sells HOOD, it's because of a regulation that doesn't allow them to collect 5% or more of their fund in an asset that derives 15% or more of its revenue from securities trading. Apparently, that's Rule 12D31. That's like a regulation. I didn't even know that was a thing. So Robinhood is like the 4th or 5th largest position in the ARK KK fund, just given the weighting size. But they're going to be selling a lot of it as Robinhood goes to 24, 25, 26. Because they're just not allowed to have that much in a securities broker. The Coinbase, they're allowed to do that because Coinbase is not a broker. It's a crypto exchange. But yeah, that's the reason why they're selling. Okay, couple of other things. We do have the GameStop meeting today. Real quick, speaking on Robinhood, this was hilarious from the GameStop press release today. So the meeting is going to happen at 12:30. I'm probably going to stream it. Most likely I'll be streaming it on this channel because I definitely want to hear what GameStop has to say. But this is their annual shareholder meeting. Look at what they said right here. You can log in as a guest if you hold your shares at Robinhood. And then you can log in as a stockholder if you hold your shares with a bank or a broker or a computer share. This shit was hilarious to me. They're basically saying, hey, you don't really own GameStop if you own it at Robinhood, so you can log in as a guest. but you're an actual stockholder. Like the difference is guest versus stockholder if you use any other bank or broker. I think either they're trolling Robinhood or they're genuinely trying to tell people to get your shares off of Robinhood, which is actually hilarious. Like, it's really funny. But yeah, the GameStop meeting will be happening today. Roaring Kitty does indeed have 9 million freaking shares of GameStop. I wonder if they're going to address that, if they're going to say anything about it. We'll see if that happens. But yeah, 12:30, I'll most likely be streaming them 11:30 Central, and we'll hear from what's going on in the world of GameStop. Okay, so that's GameStop. I want to share this real quick, talk a little bit about Tesla, and then we have a couple of other things I want to talk about. So Elon Musk has said a bunch of things over the weekend that we'll discuss, but here's Lucid CEO on a new interview. I thought it was really interesting what he had to say. So let's just take a listen for this minute. Here you go.
Do you feel you rank when it comes to Tesla, one of the leaders? I wouldn't say the leader because of BYD.
Well, I think that if we look back in time, 10, 15 years ago, Tesla was the tech leader. I think there's a degree of distraction now, and I think that Lucid has taken that mantle. I believe we're a number of years ahead in terms of our core technology from Tesla. I announced earlier this week that we've hit a landmark level of capability, that we're hitting the magic 5 miles per kilowatt hour. No one else is even close. So this is a tech race. It's yet to run its course, and we have taken the mantle of leadership. Make no mistake.
Oh, those are fighting words. It's great to have you, Peter. Thank you.
Great to be with you.
Do you feel you?
Okay, so when I heard this, there was a couple of things going in my head. Number one, I don't know what technology Lucid is creating that they're so much more advanced at than what Tesla's doing. So that's the first thing that I was a little bit confused about. Number two, he was speaking with such a deep voice. If you were just like, if you didn't know anything about Lucid or Tesla, I think you would believe him. I think you would be like, oh, wow, this guy's like really serious about the technological advancements that Lucid's making over Tesla. But I'm like, I don't think speaking with a deep voice necessarily makes your case that much better. But it did sound like I think he was trying to make the argument. The level of confidence he spoke in was kind of hilarious because he's like, Tesla used to be the technological lead and now it's Lucid. This is Lucid stock down 40% year to date. Max, it's down 74%. I mean, this thing has obviously been horrible. They've missed on deliveries for like at least the last 8 quarters. They missed on production for the last 8 quarters. I mean, the car is pretty exceptional and beautiful and all that stuff, right? It's a very luxurious car. But the idea that it's competing with Tesla, I mean, it's kind of laughable in my opinion. So really interesting to see the Lucid CEO believe that Tesla has lost its technological advancements or its leadership, and that Lucid is going to be the next one to win. And I just want to share that because I don't think that's the case, but it does seem interesting that some of the other CEOs feel that Tesla can't compete with them, given they don't really produce the results that they were able to produce. Speaking of technology, Elon's thinking of some other results that he wants to create. In the future, there will be no phones, just Neuralinks. I thought this was really interesting because obviously we didn't like that. Elon didn't like that Apple collaborated with OpenAI. Still kind of upset about that. I guess his plan to take down Apple eventually in the future would be a world without phones, but just thinking about things. So I wanted to ask the chat, do you think there is ever a world in which you would give up your phone and you would let a chip be inserted into your brain and you would order an Uber just by thinking about ordering an Uber, which is not the craziest idea, quite frankly, versus pressing Uber on your phone? Quite frankly, I'm a bit skeptical that's happening. When he says in the future, I think he must mean like 40, 50 years from now. I don't think it's anytime soon. I think Neuralink is amazing for people with disabilities and all this stuff that it can do, and that's why it's like super revolutionary. I don't know if it's the go-to device that we use every single day. I also definitely don't want to be the guinea pig to put that into my brain. That's a little... Dude, if people had a problem, if people were afraid to put a vaccine into them, I don't know if people are going to just be like, yep, stick the chip in me. Like that's going to be a little tough, I think, to get everyone on board until it fully proves that it works or that there's not any crazy side effects. But we'll see. We will see. As per Schwab, Argus Research initiates coverage of Palantir with a $29 target. Argus Research. I've never heard of them before. Let's see. Argus Research, Palantir. Oh, yeah. There you go. Argus Research, Palantir. They put up a $29 price target. Do they have any reasoning for it? No, I don't have the reasoning for it. I just see the headline. Okay, I'm going to try to get the research note in a bit. Oh, do I have the free report? Do I have it right here? Oh, I have to put in my email. Hold on. Interesting. $29 price target. Nice to see. Nice to see. Okay, I'll see if I can get that, but nice to see. We got a new bull on the street covering us. But yeah, I think putting a chip in your head is just tough. No brain trips for me. I think even the people who love Elon the most and Tesla the most, putting a chip in your head is just a little tough to imagine. With the crazy thoughts people have on a daily basis, we'd all be dead in minutes. Yo, I heard a stat that like we have about 1 trillion thoughts running through our head daily, like all of us, and we don't even notice it. It's a lot, dude. Our minds, the human brain it's just the most incredible thing ever. It's also the most confusing thing ever, right? With dementia, Alzheimer's, there's so many parts of it that we haven't figured out, but the human brain is just like the greatest invention of all time. And we are constantly thinking, especially if you have ADHD, OCD, like you can have elevated levels to your neurochemistry in your brain that just allows you to think. And so having something like Neuralink try to take advantage of that or capitalize on that or do something good with all that brain power is exciting. But it's also a question of how much would people actually trust it at the end of the day. Okay, let's move on to this topic. I thought this topic was also important, and this also brings into question the bull market. The headline of today is that bears are turning into bulls. If you're just joining, we had tons of firms on Wall Street, JP Morgan, Goldman Sachs, Evercore, basically say, Bank of America raised, I think a couple weeks ago, that the S&P is in a bull market. The broader market is going to rally, and we are going to have the breadth of the market start to widen out to different sectors, and that S&P to 6,000 by the end of the year is not that crazy. Another reason why it's not that crazy is because of India. India's GDP numbers came out on Friday. They grew 8.3% last quarter. They are 4x the US population. When I saw this stat, it was incredible. And the reason it was incredible is because the United States could only dream of that type of quarterly growth. Now, I get it. The United States is way more mature than India. I think we're growing at 1.6%. There's no way, the United States, given how mature the economy is, could grow at 8% a quarter. If AI gets us to 8% growth, it's going to be the most amazing time for prosperity and wealth creation ever. But that's likely not going to happen, right? Hopefully we get to like 3.5% over the next coming quarters. So if a lot of the growth is happening in India with 1.3 billion people, 8% growth, my question is, who has a plan to get exposure to India over the next decade? Because I think India is shaping up like Argentina becoming a democracy, or at least becoming more liberal in the classical sense. India has been a democracy for a long time, and it's expanding its democratic values. It's not a perfect democracy, but it's better than a lot of places in the rest of the world, which is friendly to business. Is it Nifty, which is the 50 equal weighted ETF for India, which is up 12% year to date. S&P's up 14%. So that ETF's done well. Or, and here's the interesting part about this, or is it just the NASDAQ? And the reason I say the NASDAQ is because what companies have the ability to penetrate those basically 600-700 million people that are growing up in the middle class of India that have disposable income? It's Apple. It's Meta. Meta's going to attack it with advertising. Google's going to attack it with advertising. YouTube already has like 440 million monthly active users just in India alone. So YouTube Premium, right? That people are going to pay for more subscriptions, more products on YouTube. Amazon, obviously going to be able to expand into India. Meta, Apple with the iPhone, Meta with advertising. I mean, there's so many different areas in which the biggest tech companies that make up the NASDAQ are going to use India as their next sector of growth. Because if we're being honest about it, these four companies, Google, Amazon, Apple, Meta, also Microsoft, right, with Copilot, all the different Indian businesses they're going to be able to pay for something like ChatGPT, they need to increase earnings. And if earnings are getting saturated in the United States, which they will get over the next like few quarters, right, there's no way they're going to be able to keep compounding in the US alone. There's only that many people that can keep paying for cloud or compute, et cetera. They're going to have to go somewhere else. And I think they're probably going to be looking towards emerging economies that exist. A couple of stats upon this. By 2030, close to 1 in 2 households will belong to either high or upper middle income categories with growing disposable income. That's from Deloitte, particularly for India. So that's something that's really important. And then in the last 20 years for India, they have maintained an average of 8% growth rate versus 2% in the United States. So, I mean, I don't know, dude. Like growth has to come from somewhere in the world. And it's either going to come from China, which doesn't allow American companies to be able to get growth. Like Disney is able to work in China a little bit. Tesla's able to work in China a little bit. I mean, even India is going to be big for Tesla, right? They're getting subsidized to create factories there. If they create some type of compact car, they're going to be able to sell more of those in India. And the rising middle class is going to want the prestige of owning a Tesla over like Tata, which is their largest company in India. I think there's going to be so many different ways big tech tries to attack India that one could make the argument that getting exposure to Indian companies is one way to play the Indian uprise. But also just getting deeper exposure to the Mag 7 is another way, because they're the only ones capable of capitalizing on that growing market. And I mean, look, those 500, 600 million people in the middle class, they're going to want 2-day shipping, right? They're going to want more pristine, forget better advertising targeting. They're going to want to actually buy stuff from ads that they see on Google and Facebook, which means their ARPU, their value to Google and Facebook are going to get higher. And so they're going to be, and Google and Facebook is going to be able to invest more in those geographies, spend more on hiring people there. There's going to be, I think, a lot of wealth creation in India. I'm actually going there in October, so I'm going to really see. I haven't been there in like 5 years. I want to see how things have changed. But I think India is definitely going to be something that we all have to keep our eye on and see what we've got going on. For those that don't know the ETF, there's one called INDA. That's one. That's iShares MSCI India ETF. That's up like 12% year to date. And then Nifty. That's another one. So if you just want 2 basic ETFs, those are the ones you look at, Nifty and INDA. I don't think in America we can buy individual Indian equities unless we go through like IBKR or something. You definitely can't on like Robinhood or Schwab, in my opinion. But still, you know, a way to get exposure over the next decade. These ETFs might end up outperforming a lot of the other ETFs that exist. I'm not going to make the ARPU joke. Don't worry. I'm not going to. I have more jokes in my wheelhouse, dude. The OGs know that I've used the ARPU joke a considerable amount of time, so I'm not going to do it again. Even though there's probably some new people here, there's some new subscribers. I'm not going to do it again. Speaking of making jokes, I did come to a realization over the weekend, and you know how this story started. Quite frankly, my mom, she wanted me to show. She showed me this meditation clip. Okay, she's getting big into like meditation and stuff, and she's like, "Hey, I want you to listen to this meditation clip." And I was like, "Mom, I'll listen to it, but like, I'm not going to meditate. Like, I'm just not that type of guy. I don't want to sit in a corner and be like old Zen. And so like, I'm just not that type of person. I'm not against it. In the future, I might start to do it. But at this moment of my life, I don't care that much about sitting down in a corner and meditating. And my mom was like, well, no, your mind's constantly racing. You're under a lot of pressure. You need to meditate. And I'm like, those things can be true. And the way I deal with the pressure could also be me watching a couple TikTok videos, which by the way, I've come across this couple on TikTok and they're the cutest couple. And that's how you guys want to know how I relax, but I don't think about the stock market. I watch couples on TikTok. Okay. That's my relaxing time. So I don't meditate. However, she got me to think of something I could do to relieve some stress on my mind. And I remember in 2010, one of the hobbies that I took up that I forgot about for the next 2 years. And I realized, you know what? I want to go back to that hobby. Ladies and gentlemen, I ordered some playing cards. I'm becoming a magician again. I'm becoming a magician. I used to know magic tricks really well back in 2010. I got into this hobby. Honestly, the YouTube algorithm showed me some magic tricks and I got really excited. I got obsessed with magic tricks. I probably know 20 magic tricks still from 2010. Maybe I can't execute them perfectly, but I know them really well. And I decided, you know what? When I'm not deep into the stock market, I'm going to focus my energies on getting better at magic. And the reason I want to do that is because I think that's like a pseudo way to meditate. That's a way to take my brain off stuff. But also, dude, I want to be the life of the party again when I get to when I have a deck of cards and like just show off my magic skills, because like it's super fun when you know how to do magic. Felicia says magically women disappear. Okay, that's kind of mean. But anyway, so once I get those cards, they're coming in today. I'm gonna be so excited to learn magic again, because it's been so long since I David Blaine, all those guys. Dude, I studied all those guys. In 2010, I was a legit magician, dude. Like I was doing tricks everywhere. But then I got to high school in 2012, and so I stopped caring about it. So I'm getting back to it. I'm just getting back to it, and we're gonna keep doing what we have to do. Okay, let's listen to Stephanie Link right here. She thinks that the market is going to broaden out specifically across a variety of sectors. I want to hear some of the stuff she's talking about, and then we're going to talk about TNA and IWM as well, because that was one of the plays we focused on last week.
Environment right now. The data in the U.S. is very favorable. The Atlanta tracker for GDP is running at 3.1%. Inflation is making progress. Initial claims to the job market remains pretty strong. And actually, the credit spreads are super tight. So all of this, you would think, because the financial conditions are fairly easy, you would think that you'd see a broadening out in the market. You're not really seeing it. As you mentioned, you're seeing it more focused on technology. That's the exciting part of the economy. But I do think you're going to start to see a broadening out once earnings come about, which we have to wait another couple of weeks. So, we're a little hostage here to the macro in the short term, but I do think earnings are going to support other parts of this market doing a little bit better.
Can you believe we're about to have earnings season again? So we just finished earnings season, right? It's been like a week since we had the last major earnings. I mean, literally last week we had Adobe and Oracle, which were still pretty big. We start earnings again on July 12th. July 12th, the banks happen again, which is about a month away, but still, we're going to get right back into earnings season.
I had seen some statistics that suggest that a third of all capital inflows have gone into the U.S. market since the pandemic, that it has taken more than its share of the gains. But you wonder how quickly things could change. And if you look for an example, go to France, a 5% pullback on concerns with that snap election. You've got not just the far right candidate who's outpacing Macron, but the far left too. Macron's party in third place, at least in the polling that they're seeing right now. And it's got a lot of questions about what happens and how politics really can have an impact on the markets too. Right now, France has lost all of its gains for the year in its markets. Do you worry that—
Which is kind of crazy. So France had some more right-wing people elected and their stock markets have started to fall. So we're seeing some of the geopolitical issues happen across the world at the intersection of politics as well.
that we are prone to potential problems here with politics front and center, or do you think we're the beneficiary of any chaos that plays out in Europe?
Yeah, I think politics are always going to be creating a volatility in any markets because it's the unknown. The outcome is unknown. I do think, though, that sometimes when we do see this volatility, especially here in the States, I think it's an opportunity. I mean, I think that we have to step back, and whoever gets in as president, the more important thing in my mind is really the mix of Congress. And so we'll have to see how that shapes up. If you have, an entire party that has the presidency, then as well as the two houses of Congress, that could be something that creates a lot more volatility. But I do think overall, Becky, it comes down to fundamentals and companies, what they're doing.
And I agree with her. If fundamentals are good, earnings are good, inflation's coming down, then we're going to have a broad market rally regardless of who becomes the president. Now, in terms of the presidential election in the United States, we're going to have the first debate in a week. I will be covering it live on the channel. Again, going to be covering it as objectively as I can, and we're just going to be looking at points from both candidates. Biden did raise $30 million, so Trump raised $12 million from the David Sachs Chamath fundraiser. For those that don't know, David Sachs and Chamath, they had a fundraiser for him in San Francisco. They raised about $12 million from the tech ecosystem. And so they were very positive of Trump's pro-AI, pro-crypto, kind of pro-tech leanings. Biden went to Hollywood over the weekend with Obama and Jimmy Kimmel, and they raised $30 million, which is a lot of money. I was actually surprised. $30 million in a few days. I mean, that's pretty heavy. So both Trump and Biden are showing that they have strong support among their constituencies. And the question now becomes what that debate looks like, where the polls go, and then inevitably what type of election we get. I don't even think Trump's been the official Republican nominee yet. Like, I think we still have to have the RNC, which I think that's in July. And then Trump will be officially declared the candidate. And then they do what they have to do. So we will see what happens with politics over the coming months. But I think if earnings are good and inflation comes down, the market is not going to care that much about who becomes the president, which is going to be good for the rest of us. All right, 30 seconds until earnings, not until earnings, until the market opens. Let's see what happens. Yesterday was a good week. We had good data, a little bit choppy towards the end of the week for individual equities. Bitcoin obviously took a little bit of a hit. So this week, if we can do some strong earnings, we have a lot of Feds presidents that are speaking, a lot of different macro data coming out. If that can go well, then hopefully the market continues to do what it has done. All right, 9:30 a.m. Monday, June 17th. Thank you all for being here. The stock market is now open. Wake your ass up. Here we go. Wow, Robin, a nice bounce up to 0.27% on the day. 22.48. It was at 22.10 in the pre-markets, 22.53. So the dip getting bought up on Robinhood right here, 22.53 on the day. Google is down 0.7%, 177. IWM continues to fall down 0.22 on the day, 198. INDA, India is down a little bit. S&P 500, 541.98, down 0.15%. Relatively flat, but down a little bit on the day. Robinhood again, 22.56, up 0.62% on the day. Nvidia, 132.91, looking like Nvidia wants to get to 133. again. Looks like it wants to get their unbelievable run for Nvidia. Investors cannot stop buying Nvidia. 132.80. Tesla 178 right now. SMH, that's the ETF. That's up, I think, like 25% year to date. That has Broadcom, Nvidia, AMD, all those guys, and Broadcom and Nvidia helping it inch up over the past week, given Broadcom had great earnings. Wow, Celsius below 60. Oh my God. Celsius below 60. Wow. Wow, wow, wow. What a story this year. This thing was at 52 in January, ran all the way up to basically 99.6, right? Like, I think it almost got even closer to 100. Now right back down to 58. So quickly, this story has changed from they're the fastest growing energy drink to are they unhealthy for you, quite frankly? And are they going to keep growing that fast? Oracle at 139. Starbucks is down a little bit. Starbucks has been relatively flat, actually, for the past couple of weeks. Ever since they've had earnings, they've been kind of stuck in that 75-80 range. So they continue to go down. AMC's up a little bit, 2.8% on the day. GameStop is up a little bit, 0.78%. Google's down. Disney 100.96. Inside Out 2 came out over the weekend. Let me know if anyone watched it. I think it did like $300 million at the box office, so that was really good for Disney. That was their first hit in a while because they haven't had a big hit in a while, but that one was good for them. Microsoft 444. We'll talk about Dan Ives' price target in a second. He says 550. He raised it from 500 to 550. Apple 214, up almost 1%. Amazon's down a little bit. Nvidia continues to go higher. Tesla 178. Nvidia looks like it wants 133. Yep, there you go. 133 on Nvidia. Now, TJ and I on the options part of Friday's market open, we bought 300 shares of Nvidia. We sold 3 covered calls at 140 for July 12th, and we sold 7 cash secured puts at 125. So our adjusted cost basis on Nvidia is 121, but we did buy 300 shares at 132. So we'll see how that works out. But we either bought the top or we bought something that has a lot more room to run towards the end of the year. Nvidia right now, $3.27 trillion market cap. Meta as well, down a little bit on the day. That's at 500. Let's go to crypto. What's crypto doing? Bitcoin continues to struggle. 65,416. Now Robinhood back down to 2220. So it bounced up to 2256, right back down to 2217. That's probably because of Bitcoin and people taking some profits, algorithms getting into motion there. CleanSpark 1704, Coinbase 236, Iren 1297, Cypher 46, MicroStrategy 413 or 1435, down 4%, and then Bitfarms down about 0.59% on the day. SoFi, where's SoFi? Where is SoFi? Wow. Oh my God. Oh my God. 639 on SoFi. Wow. Just incredible, dude. Did not expect to see that on SoFi. Wow. I mean, dude, that's incredible. It is absolutely incredible. I think SoFi's bottoming out here, but then again, at 680, I thought it was closer to bottoming out. So I don't know, man. Noto's got to do something. The teams over there has got to do something to get people excited. But right now, that's struggling. Look, maybe it is really the best buy of the dip, and in 2 years, this thing's going to be at $12, and everyone's going to be wondering why they didn't buy more. Or maybe there's something fundamentally and structurally wrong, and I guess we'll see. We will see what happens there. So you got SoFi at 638 right now. S&P at 542 again. S&P relatively flat. PayPal also with SoFi. I mean, they've both been stuck all year. Now PayPal's performed a little bit better, but still not been a good year for any of those two this year. Salesforce down a little bit. Snowflake 125. We did sell 3 cash secured puts on Snowflake as well at 125. I think we sold more than 3. I think we sold like 10 of them. That's for 120. We sold it at 120. So if it gets to 120, then we'll have to buy shares there. Palantir is up on the day, 23.64. Palantir is green. Broadcom, wow. Another 3% on Broadcom? Holy crap, dude. Another 3% on Broadcom? Dude, when I said Broadcom is acting like the next Nvidia, it's going up as if it was. Broadcom stock in the past week is up. In the past 6 months, it's up 55%. Past week, it's up 30%. Year to date, it's up 64%. Past year, 105%. Goodness gracious. I'm not even fully sure what Broadcom does. I mean, I know they're super important in the semiconductor space, and I know they help in the process of making chips, and they're very important for a variety of reasons. I don't know them as well as I would know Nvidia, and I don't know Nvidia that well, but I know them a lot better than Broadcom. But it seems like the market wants to get exposure, and outside of Nvidia, they're like, well, let's go with Broadcom. There is a split that's going to happen, so that's also probably hyping it up. It's going to be $178 in like a month when it splits. HIMS is up 5%. Yeah, the HIMS thing I don't fully understand. So I agree. HIMS definitely deserves a pump, right? HIMS is definitely gained. It deserves momentum. and it's done very well. But GLP and Ozempic is like the catalyst for this to run from 16 to 24. I wonder how much the market is really willing to give it that momentum. Or is it because of Ozempic and is it because of GLP, or is it just because of FOMO at this point? And there's a good argument that maybe it's still cheap given it's a $5 billion market cap. They're growing 88% year over year. They're profitable, and they just got a huge new market worth about $200 billion, which is weight loss, that is opened up for them to be able to penetrate. So maybe they are cheap, or maybe there's a ton of FOMO coming in. It's one or the other, or it's maybe both, quite frankly. But I definitely missed Hims. If you got Hims, then congrats, because Hims absolutely is crushing it. Absolutely is crushing it. I was in Hims at 6, but sold at 12. Rest in peace. Yeah, dude, it sucks. I mean, look, you sold for a double. You can't blame yourself. But sometimes the story has a lot more juice in it than we can see. AMD down 2%. Interesting. So Nvidia's up and AMD is down. Very interesting, dude. The dichotomy and the divergence between AMD and Nvidia has always been interesting. Remember, AMD, and this is one thing I'll give myself a little bit of credit for, okay? I will give myself a little bit of credit for on this one. When AMD got to 227 right here, this was in March, I remember, we can roll back the tape on this one, I said this shit was overvalued. Because I don't know everything about AMD, but I know 227 made no sense because people were calling AMD overvalued at 120. And historically, it has been a bit overvalued because the growth has just not been anywhere near Nvidia. And the reason I said at 220 this shit was insane was because Jose and I, who's a friend of the channel who goes through semiconductor stocks, we went through their first quarter earnings. Or sorry, at that time it was Q4 2023. It was bad. It was really bad. And the guidance for Q1 was also really bad. So when it ran up to 227, you know, the little bit of common sense I had him, he said, this makes no sense. Like these are not Nvidia type of earnings. So AMD definitely got a hit. I don't know if it's cheap right now, but you can see that the market obviously wants more Nvidia than AMD. Nvidia right here, 133.24. That's going above 133. SoFi is 646, still down. Carvana, which is part of the IWM, by the way. Carvana is down 1%. Now, Carvana is up like 100% year to date. So those stocks that fall a little bit, I mean, it's reasonable. They're up a lot. But that one is down a little bit today. Where's Palantir? Is Palantir trying to go to 24? 2387. See, again, this is so interesting, right? Palantir 2388 up 1.3%. Snowflake down 1%. CRM or 0.5%. CRM down 0.94%. Again, bro, if we're right about this, guys, if we're actually right, Robin, right here, 2230, if we're actually right that Palantir is the true AI play and the market's going to realize it, what do you think is going to happen when the market realizes a lot of these software companies have no AI moat? And again, maybe they do. I'm not saying they don't. We'll see in the future. When the market realizes a lot of these companies have very little AI moat, and Palantir has been sitting there just saying, hey, what about us for like the past 2 years? I mean, dude, if all that money starts to rotate, that's going to be exciting. That is going to be exciting. Should we buy a share of Palantir? Well, we got to wait till it gets to like 23.95. We got to wait. Let's see. Okay, let me queue it up. Let's queue it up right here. All right, so we got like 20. All right, so we got the one share loaded up. Got the one share loaded up. We'll hit it right when it gets to 23.96, 97ish. I'll keep it on the side. It's on. I'll keep it right there. I'll swipe up right when I swipe up. I'll let you guys know. Palantir's overvalued right here at a very decent premium. I'm not going to argue that Palantir isn't quote unquote overvalued, but I am going to say that, look, the market's willing to pay a little bit more for something they think is real at the end of the day. Is it overvalued given the growth rate? Yes, I've been on record by that. Like, look, we got to get more than 21% year-over-year growth. I get it. But if the rest of the guys, which Snowflake, by the way, is going down to like 24% year-over-year, if they have low growth and they have no AI moat, I mean, the market's going to rotate the money into what they think is going to work. And so we'll see. We will see. Okay, AMD 155, Hims at 25. Wow, Hims, incredible day. 25-1. 25-1 on AMD. On Hims. S&P 542, making up some of its losses. It's now flat for the day. Chipotle's up a little bit. Broadcom, wow, up 4%. Holy crap, dude. It was up 2% 2 seconds ago. Oh my God. Amazon's down a little bit. Celsius continues to struggle. Microsoft's up. Micron. So Bank of America raised their Micron target to 170 from 145. So they are bullish. And then let me pull up Dan Ives and what he said about Microsoft, because he continues to be bullish on that one as well. Okay. So Dan Ives says, we are raising our price target for Microsoft from 550 to 500 to 550, reflecting incrementally bullish recent AI customer checks with a tidal wave of Copilot and Azure monetization now on the doorstep for MSFT. We have seen AI deal conversions for the enterprise accelerate, which is good because if he's seeing Microsoft's AI deal conversions accelerate, and we saw that with Oracle where they had 30 deals in the last 90 days just on AI, one with ChatGPT. Oh, we got Palantir 24. I didn't even do the one share. We got Palantir 24. There you go. There you go. Then that means Palantir likely is also going to have some deal acceleration as well, which is going to be important because the broader market's going to see AI accelerate. I was going to swipe it right after reading the Microsoft thing. I thought it would stay at 23.95. Wow, it came right back down. Damn, that was quick, dude. Went from 24 to 23.95 super quick. Wow, that was quick. All right, we're going to buy a share. I just bought a share just now. I just bought a share right now. Oh, there you go. I bought it at 23.97. 23.97. I think we hit 24 right when I hit it, then we came right back down. There you go, 24. Let's see if we can hold it, bro. It's being bipolar there. It's being a little scary right there, trying to get to 24. So we got the one share, 23.97, bumped it up a couple cents. It's struggling right there, but money is flowing in, which is exciting. Money is flowing in. Aaron says, told you. Yeah, dude, the one share is the one share. It's always been the one share. I remember when it was rallying at when we were trying to get to 22 because with the previous high was 21.88 and it was like 21.95 and we did the one share. That was back on February 5th. And we finally broke through 22. It was the most glorious moment ever, dude. It was amazing. Because remember, 21.88 was resistance for a good 3 months. And then after earnings, we just crushed right through it. And it was awesome. So there you go. Why is it up? Well, one new firm apparently is putting out a $29 price target. Argus Research. I don't know if anyone heard of these guys. I'm going to try to get the report from them, but I don't have the report. But they said $29. Let me see if I can search on Twitter real quick. Argus Research, Palantir. Let's see if we get their note. Yeah, I don't have their note yet. But they said $29. And so I guess that's another firm that's more excited about it. Carvana's down, Snowflake's down, CRM is down, Nvidia 133, that's up. GameStop's down a little bit. Hims 25.22, incredible run for Hims. Robinhood 22.18, Snapchat 15.46, Shopify 65. Shopify had a great run on Friday. SMCI up 1%. It was up 9% last week. Then it fell a little bit on Friday. JP Morgan's up, Bank of America's down, Apple 213, that one's still up. Amazon is up. Dell. So what's interesting about Dell's up 4%. The CEO sold $700 million on Thursday and Friday. And they weren't scheduled sales. Usually when you sell almost $1 billion, that's not scheduled. So, look, I don't want to read too much into insider selling, but $700 million worth of Dell stock is a lot. Michael Dell sold a lot. So yeah, I guess it was a big insider sale, but market, still feels there's a lot of room to run for Dell. Operating margins increase. Dell gets more exciting. Bank of America, $180 price target. So we'll see what happens with Dell, but $139.97 right now on Dell. Where's SoFi? SoFi still at 640. SoFi green now. Noto did buy 30,000 shares last week. SoFi right here, 642. I would imagine Noto buys more, 200,000 for someone who's worth 120 million is not that much money. So I would imagine he probably buys some more potentially, but we will see. Too late for the Broadcom train. I can't answer that because I have no idea, quite frankly. I don't know how deep Broadcom can become or how big it can become. The split is happening. Market cap's 838 billion. I mean, dude, Broadcom. How many times have we talked about Broadcom becoming $1 trillion company? The answer is 0. I don't think most people even knew that the market cap was close to 900 billion. So if this thing gets into the $1 trillion club with the Mag 7, I mean, people are definitely going to have the conversation that it deserves to replace Tesla. And that's definitely going to be a conversation that happens. Or maybe it becomes the Mag 8. But I don't know if there's more room to run. I got to go through Broadcom. We got to do some deep dives on this one. It seems like with all intended purposes, if Nvidia is going to run, Broadcom has plenty of room to keep running. Tesla, let's see Tesla right now. Tesla's green, 1.6%. Tesla is indeed green. Microsoft is doing a lot and people are seeing their revenues going to be up like crazy in Q4. They're scaling up in Azure, their cloud plus AI. There's only one way for Microsoft to go. I agree. Jose says, I'm starting a position in Celsius with some of the HIMS gains, reducing the position because it's too big for my liking. Yeah, look, I don't think that's the worst idea. I just would be I would take a little time to really understand the due diligence around Celsius, because if the sales are continuing to decline to the downside or they're staying flat, The market's not going to give this the premium that it's getting, even at $57. It's still 1/3 of Monster's market cap. It's not putting anywhere near the numbers that Monster's putting up in terms of revenue. So just one thing to think about if anyone wants to buy the dip on Celsius, like the valuation has always had a premium because the growth has always been exceptional. If the growth slows down, the valuations might have to take a little bit of a breather as well. Okay. Amit, thoughts on choosing Target over Walmart? This is a hell of a question. Target actually from the bottoms has not been bad this year. It's had a tough year overall, especially if you bought at that 180 level, but 142 on Target right now. Walmart here is at 66. I personally like Walmart, quite frankly, because I think they're cheaper than Target on consumer prices. The reason Target had to lower 5,000 different items in terms of prices is because Target has always been a little bit more elevated than Walmart because they don't have the economies of scale that Walmart has to create the cheaper prices. Walmart also had a split, which is nice, and that's bullish for Walmart. And in general, I do think Walmart's doing a little bit more with AI, if you just look at some of the things they put out and in terms of what they're trying to do with e-commerce, than Target. So if I had to pick one or the other, I would pick Walmart. Obviously, Target is sold off more throughout the year, so maybe there's more room to run for Target. By the way, Target at $65 billion versus Walmart at $532 billion. That's another argument. Now, Walmart does put up massive numbers in terms of revenue over Target, but I do like Walmart just long term because I think I understand the business a little bit better. But I don't, dude, like Target and Walmart both. I mean, you didn't need to have big tech to have a good year. Like Walmart year to date is up 25%. I mean, that's incredible. We saw Chipotle is up like 40% year to date. Target is down 0.78%, but if you got it at the bottoms, you're not doing too bad. If you got it at 170, 180, then yeah, it's been a little tough. IWM spreads got filled. They have not. So going back to what I was talking about last week on Friday, I do want to make a play on IWM because it's starting to feel like eventually this rally has to broaden out. So let's actually do it live. Let's see if we can do it. So we're actually going to do it on TNA, which is the 3x leverage fund on IWM. And we're going to try to do a leap spread. So let's go. Let's trade options. Let's buy a call. Let's give ourselves 2 years to make this happen. I'm trying to do 45 and 50. So we're going to buy the 45. We're going to sell the 50. And see, the bid and ask is horrible here because, well, it's actually better than before. If we did 10 of these at $1, they're not going to get filled. 1-0. Okay, so we're going to do it at 1-0 and we'll see if it gets filled. That would get us in the game. That would basically be a close to 4x we would get here by buying this on TNA. It's probably not going to get filled, but let's see. I don't want to overpay for this one. I don't want to overpay. Yeah, we'll see if it gets filled later. Again, I'm not being super greedy here. I definitely don't want to overpay. I think we'll get cheaper prices. But we'll see. We'll see if it happens. I think IWM at some point has to run. It just cannot stay this low while the broader market is rallying, especially when we get a rate cut. And maybe IWM doesn't run a lot. Maybe it's at 198. Maybe it goes to like 220 and that's the run and it's over. But history suggests that after that first rate cut, we see a broadening of the rally. And I just don't think Nvidia goes to 5 trillion. I think IWM goes from 198 to maybe 250, right? Like if Nvidia goes to 5 trillion, dude, it's like, all right, fuck, it's Nvidia's world and we're just living in it. Stanley Druckenmiller as well, $500 million bet on IWM. Like a lot of the smart money is moving into small caps. The question is just when is going to be their moment, and we'll see when it happens. And I like TNA because that's leveraged on it, right? So if IWM goes up 3%, TNA goes up 10%. So the potential for some momentum there is possible, even if it's only a short-term play, given rates don't come down until like September, November. Robinhood, we got below 22. And again, I think this is two things. I think people are taking profits. And I think that Bitcoin falling is not helping Robinhood here at 21.89. So getting a little bit of downside momentum on Robinhood. Where's Bitcoin? Bitcoin falling another 1.43. It was just at 65.5 5 minutes ago. Now it's at 65.2. 62.5, I think, is the place to watch for Bitcoin. And so we'll see what happens. We'll see what happens there. Would it be dumb not to buy TQQ right now with the rate cuts coming and tech expanding? I don't think it's dumb to not buy them. I just think the problem with, again, buying big tech right now is, unfortunately, the time to buy it was in January. Not saying now is a bad time to buy it, but it's rallied a lot, dude. And maybe it just keeps rallying, but Q2 earnings are going to have to be even better than Q1 to try to get outsized exposure. And that's why I think the smart money is rotating from big tech to small caps or to places that just haven't seen that type of growth. Now, granted, all of that smart money could be wrong And Nvidia, Microsoft, Amazon put up even crazier numbers, and everyone's just like, why didn't we buy more big tech? It's just a question of how crazy do those numbers have to become for the market to justify even more expanding multiples. And I think we're going to have to see. I think we will have to see. PayPal, where's PayPal? PayPal still at 60. PayPal's at 60. SoFi at 646. So SoFi's kind of flat. PayPal at $60 as well. QQQ at 478. Snowflake down 126. HIMS 2447. Palantir now red. So we got the 24 for 2 seconds, and then we came red for Palantir. Amit, are you getting more hood? No. So I have my hood position fully built. It's built out pretty aggressively. So I mean, look, the hood dip to me is just look. I bought it at $8, so like the hood dip is not that exciting to me. So well, yeah, not it now. Look, if it falls to 20 or below 20, I'll get a lot more excited to probably buy. But yeah, for me, I've got a relatively large position there, so don't need to get the dip on that. India 55.18, that's flat on the day. Google 177, MicroStrategy 1436, Snapchat 1549. I was looking at Snapchat covered call premiums. They're not the best. I was thinking of it. It's not that good. People aren't willing to pay that much for the calls on Snapchat. The Nvidia premiums on covered calls are just gigantic, dude. I mean, it's ridiculous. So that's why we bought more Nvidia on Friday with TJ. Yeah, Palantir got hit. The leverage ETFs have negative bias, and they can even go to zero triple leverage ones if the stocks falls by 34%. Yeah, 100%, right? Because if the stocks falls by 34%, 34 times 3, you're down 100% on the leverage ETFs. So that definitely can happen. Nvidia is dropping right now. Look, I mean, if the market goes red, I don't think it's the craziest thing in the world, because we've had like a hell of a month in May and so far in June. So if we do see some volatility and we see the markets go red, I don't think that's the crazy thing in the world. VIX right now, that was up 7% on Friday. That's up 4% today. So that's definitely a little bit more volatile. We're seeing it. And I think we also have to be patient, dude. Like S&P's up 15% year to date. It's not insane that we see a bit of a pullback, especially if the Fed's not going to cut rates anytime soon, right? If they're going to wait until September, then the market's still going to be scared, especially with the election coming up. So you can make an easy argument for why you would see a sell-off. It's just a question of how easily would the dip be bought up, which every time we see the market sell off, at least so far this year, that dip continues, especially on the S&P. I mean, the S&P still at 541 to get bought out. Okay, let's hear from, so let's get some coverage on Elon. I'll go to that article about TikTok traders on what they're doing with astrology for Wall Street, because that's actually hilarious. But let's get a little bit more coverage on what's going on with Tesla. Tesla's green on the day. Compensation vote passed. Let's see what the future has for Tesla and Tesla shareholders.
Shareholders voted to approve Elon Musk's pay package. Many investors are hoping that this will be the return of the old Elon with a renewed focus in the EV manufacturer. Joining us right now to talk about this and more is Tim Higgins. He's the Wall Street Journal business columnist, also a CNBC contributor. And Tim, it's great to see you.
Good to see you.
All right. So he was back on stage dancing around, telling them he loved these shareholders. Is this a return to the days of old?
It looks like it, right? I mean, you see all sorts of Elons these days. And, what was worrying some investors was that the sad Elon, the angry Elon. And here we had the Elon that excites these investors and excites the market about the potential for what Tesla can do. And the concern for so many months has been that Elon was distracted someplace else, that he was going to leave. And the idea that he could maybe bring some of his attention to Tesla is definitely what these investors are so excited about.
So the investors voted for this, but it still has to go through the Delaware court process. I mean,
Absolutely.
Is that potentially convoluted, or does this, look, they did what the judge was saying they didn't do last time around. It's hard to imagine that they voted in favor of it this time and they didn't know what they were talking about, or the board diluted them. There's been so much written and spoken about it.
Well, that's the argument that Tesla's going to make, that this turnout, this excitement will help bolster their case as they appeal this. But legal experts say this is going to be decided in the courts. Multiple scenarios could play out. The judge could say, yes, exactly, that Tesla shareholders knew what they're doing, or maybe not agree. And this could potentially likely go to the Delaware Supreme Court.
Okay, let's set this part aside, because there have been some questions raised about Tesla, about its future, and those could still stick around too. Stock has been under pressure.
You know, it's interesting because when we saw him on stage, it was so much excitement about robots and AI, but the core issues for Tesla are in the today. The car making business, metal bashing is tough, and Tesla is in a little bit of a slump here. EVs are not necessarily as exciting this year as they've been in past years for consumers, and Tesla really is kind of going to market with some old vehicles, and so there's concern there that maybe they are on their back foot.
Robo-taxis. He said that that's basically the heart of the plan, and that they're going to have, with full self-driving, they will have an entire robo-taxi business that you can put your car in, your Tesla in, whenever you choose to do it, or take it out. I mean, how far away is that promise?
But it seems like it's pretty far away. We don't know everything under the hood, obviously, but we haven't seen any technology that would suggest they're ready to deploy that today. For example, I live in San Francisco. I can see Waymos going around the city without people in them. The robot taxi is working there, but Tesla hasn't put that kind of technology in play yet.
How many do you see in San Francisco? Because we don't really see them here.
I see them all the time. When I go for my morning run, I'm seeing half a dozen usually. In fact, I have a game where I take pictures of them and send them to my niece so she can see them.
So, I mean, look, I think robotaxis are definitely coming. The idea that he's seeing these many Waymos in the street makes sense as well. But for investors in Tesla, especially the street, they're looking for the monetization of robotaxis. Now, we did see someone on Twitter last week tweet that they got the access to the beta robotaxi app, the stuff that we saw teased from Elon, where like it's like a pseudo Uber app inside of your phone. I think there was a Tesla employee that was like testing it out and they were tweeting about it. So I think on 8.8, we're actually going to get a little bit more progress than people are thinking we're going to get in terms of what the rollout of this looks like. If we just get smoke and mirrors in terms of, hey, this is coming, and we get zero timeline or justification of when it's coming, I think Tesla's going to tank, because I think the market just cannot handle more volatility in terms of the timelines of Tesla. Dan Ives did raise his price target to 350. He thinks that now that Musk got compensated, the overhang on the stock is gone, but we're going to need some real numbers and progress and at least timelines on August 8th on when it's happening. Even if it's happening 2 years out, if they're honest about that, I think investors at least can model it versus being up in the air and being in limbo for when it's going to happen, which is what I think investors have hated the most about Elon, is just like, they don't know when it's going to happen. And that's kind of the biggest problem there. Granted, Elon got paid. Compensation is there. We did see on Friday for the market close, we did have someone call Tesla the next Enron on Yahoo Finance. That was funny. So you've got random people, pulling out their knives to say random shit about Elon. And I think a lot of people are saying that because Elon's promising 30 trillion, 25 trillion on Optimus, all this stuff. I think those numbers, you could argue, are conservative. It's just a question of the timeline on those numbers, and it's not happening by 2030. But if there was any company where it would happen with, I think it would be Tesla. It's just going to take some time in order for that to happen. Having said that, I want to show you guys one thing Steve and I did on the market close, which I thought was really, really fun. And I'll ask the question to you guys in the chat, and then we'll see your answers, and we'll go to that TikTok article. This was a really fun little thing on the market close. I'll actually clip the video and I'll post it on Twitter so you guys can see it. But I asked them two questions. Over the next decade, what stock would you take out of the Max 7 if you could only own 6, right? So if you had to eliminate 1. And then what stock in the Max 7 would you own if you could only own 1? So I mean, out of the Max 7, you're only allowed to own 1 over the next decade. You have to pick 1 only, which means till 2034. That's the timeline. And then what stock do you have to get rid of if you can't own 1 out of the 7? And this was really fun because we ended up going down an entire timeline of like in order what we would get rid of. And my order was, I would get rid of Microsoft first, then Apple, then Meta, then Google, then Amazon, then Nvidia, and I picked Tesla. Tesla was the one I would keep for the next decade. I thought I would pick Nvidia, but then when it came down to it, I was like, you know what? I'm going with Tesla. And I got rid of Microsoft first. Probably not the best choice. I probably should have got rid of Meta first. Microsoft has way more potential than Meta, in my opinion, but I got rid of Microsoft first. He had the same thing as me, except he got rid of Nvidia and Tesla, and he kept Amazon, which I thought was really interesting, keeping Amazon. So I said Tesla's in, Microsoft's out. He said Amazon's in. He also agreed Microsoft would be out in the beginning. But ultimately, I thought I went with Tesla. He went with Amazon. And I think over the next decade, I don't know if Tesla gets to 30 trillion, but the idea that there's not a trillion or a T part of Tesla's market cap in the next decade, I think is kind of laughable. I think Tesla's going to get to at least a trillion, if not many more trillion, just given the broad potential that exists. Okay, let's see what we got in the chat. We have Nvidia. I want to pick Nvidia. I feel like it's going to be cyclical at some point in the next decade, and maybe it's 5-7 years from now, but at some point, GPU demand is not going to be as high as it is right now. Now, maybe I'm wrong about that. But if it's not, then yeah, Nvidia is going to have to come down a little bit. Amazon's the correct answer. Apple, Meta, and Google will benefit massively during the elections. Yeah, that's this year. But the question is over the next. The thing about Meta, I don't like Meta over the next decade. I love Meta as a company. I'm not anti-Zuck or anything like that. But at the end of the day, Meta is a one-trick pony, and that one-trick pony is advertising. The metaverse is not real. And by the way, even if the metaverse was real, what would be the business model? Advertising. Meta Quest is fine, but they don't make any money off that. And so what's left? Like literally what's left? Ray-Bans? Like no, like it's advertising. And I think over the next decade, advertising is going to get really big, right? It's not going anywhere. But it's like, do you really want to bet on advertising over like FSD or robots, you know? Or even Google. I'd rather have Google over Meta just because I think Gemini and the stuff what they're doing with AI is so exciting. I don't see how Meta transforms itself, and they probably do. I'm ignorant to how they transform themselves over the next decade from just being an advertiser, which is primarily what they are. Paths as a new 52-week low. Holy crap. Wow. 1132 on Path. What are the put premiums on Path? Let's see right now. What are the put premiums on Path? Path trade options. Let's go a month out. July 12th. Sell put. Oh, wow. The put premiums suck. It's not even good. They're giving you $2 to lock up 900. Damn, no one's buying puts on this either. The covered call premiums are horrible as well. Yeah, why would you buy calls on Path? Yeah, dude, this stock's just hit. Kathy Wood did buy another 1 million shares of it a couple weeks ago. Along with, guys, I was looking at Teladoc last night. This is another one Kathy's been liquidating at 983. I was looking, dude, at like, is there a shot this thing gets back to 20? I have no clue. If it does, you can make like a 20x on the options, but that's how mispriced they are. But I mean, the odds that Teladoc doubles in 2 years, I don't know. This was a pandemic stock, and it's been kind of hit. Same thing with Zoom. She started to sell off Zoom as well. Zoom 57. This one got hit as well. ARK Innovation right now, the ETF is down 1% of the day. A lot of these stocks just got hit badly. They got hit badly. S&P still 542, so still flat for the day. Okay, so let's go to this article that I was going to show you guys, this TikTok article. This thing was hilarious, dude. So let's read a little bit off this because this kind of signals, or if someone read this, you could signal it's a market top. I don't think it's a market top. I think it's just funny, but it's hilarious. So Stefina Nova, who goes by Blonde Rich Witch on TikTok, is a 25-year-old living in New York City using astrology and intuition to guide her day trading. She says, after scanning the market from 8:30 a.m. to 9 a.m. and picking the stock I'll be trading that day, today it was Amazon, I'll do a single card pull to confirm my decision or get guidance, she says in one video. Today I pulled the Ace of Cups, which represents abundance. This gave me the needed assurance to trust in my strategy. Nova is one of many TikTokers to ascribe her financial success to the trust in the universe, touting techniques like using lunar cycles to buy Bitcoin and astrology to make $440,000 in crypto trading. The practice, while far-fetched compared to conventional strategies of sophisticated investors, is at the intersection of Gen Z's love of vibes and financial freedom. Following the stars has worked out for Nova. She quit her job as a tarot reader and astrology consultant this year to day trade, finding a more consistent stream of income and earning about $5,000 a month. So there you go. Dude, that's kind of crazy, right? That's kind of crazy. We got to go to her TikTok. We got to see some of these TikToks. That is hilarious. I mean, look, if it's working, who are we, right? If it's working. That's crazy, dude. That is so crazy. This is so good. I'm trying to find one of her TikToks where she's talking. That's hilarious, bro. I mean, look, Buffett has looking at cash flows, and Blonde Rich Witch has looking at souls, lunar cycles, and that's how she determines it. That's how she figures it out. Okay, I can't find one of her TikToks where she's talking, but like, there you go. She's winning. Isn't technical analysis the same as astrology for men? Yeah, pretty much, right? Pretty much. She's the next interview. I should interview her, dude. I should reach out to her and interview her. That would be a fun interview. I mean, look, at the end of the day, I'm not hating on it. If she's finding a way to make money and she's using astrology to do it, then if it's working, it's working. Now, one day it might not work, right? And she'll lose money. But if it's working, I mean, shit, it's working. It is what it is. Intuition. That's at some point, though, intuition has to go wrong because no one's intuition is that good in the market. Everyone's intuition usually sucks in the market. So we'll see. We'll see what happens. We would troll to it. Yeah, you guys would be trolling way too hard. Way too hard. Berkshire has underperformed the S&P over the past 10 years. What does this tell us? She's right. Yeah, basically. That's crazy. Admit you need to do a Tarot stock pick of the day. Dude, I remember I was talking to this girl back in 2020. This girl, she in my opinion, she was incredibly attractive, right? And we start talking a lot, start FaceTiming, all this stuff. And then she's like super into astrology and shit. And she tells me about it. And in my head, I'm like, well, if I tell her that I think that's a whole, I think that's bullshit, this good vibe and conversations we're having is going to go down the drain because she's into this shit. So in my head, I'm like, to keep the conversation going, I'm like, well, tell me more. Tell me more about me being a rising sun and a Scorpio and all this shit, right? And then she gets into it. She's like, do you want me to do a tarot reading on you? I'm like, sure. So we get on FaceTime and she does this fucking tarot reading on me. And I'm not going to lie, it was kind of accurate. I also thought it was kind of whatever, but I was like, oh my God, this is so true. It became this whole funny thing. Look, I kind of think it doesn't make a lot of sense, but she was super like, she was super like happy to do a tarot reading on me. And who am I? Who am I to deny her happiness from the tarot reading? And so that was my experience with tarot readers and how deeply intertwined they are with feeling their philosophies on tarot reading. And look, we kept talking after that because I showed her the respect of caring about her tarot reading capabilities. So, I mean, look, at the end of the day, sometimes you have to. I think that's more so about like if you're going to like conversate with someone new, you have to like give in to a little bit of their interest. I mean, look, I was teaching her about the stock market, and I know she probably didn't care about the stock market, so she was listening to me talk about stocks, and she probably didn't give a shit. So I heard her talk about tarot reading, and she told me that my life was filled with like abundance and shit, and I was like, all right, cool, sure, that's amazing. So. that's what you have to do sometimes. Okay, let's listen to Deepwater talk more about the AI infrastructure bill. This is another reason why the market continues to buy AI stocks, because this thing is lasting for many, many years. Here we go.
I was Doug Clinton, Deepwater Asset Management Managing Partner. And some of the points you make, Doug, are interesting, but I think it does make sense given what we're seeing with AI. But you point out that valuations in tech are sort of upside down. That typically software companies trade at a 30% premium to hardware companies on a revenue multiple, and now it's hardware at a 15% premium to software, and then we'll go on it. There's another something else as far as earnings. Same story with earnings, but it's all about AI, and the build out is starting in hardware. And down the road, I guess we'll see software benefit.
That's the hope. And I think that's the story, Joe, that investors are trying to work through right now. Is we're obviously seeing the inflection. Nvidia is the poster child of that in terms of actual revenue trajectory from this infrastructure spend. And we haven't yet really seen it on the software side. And I think that explains a lot of this divergence that we're seeing right now in the multiples between hardware and software companies. I do think it probably makes sense to start to try to look at some of these software names, but the challenge to me is you have to be really patient because we're still really early in our view in terms of this AI infrastructure build. I think it could still last several years. And so even if you start to look at software now and say, hey, there's a relative value here, you may have to wait several years before this hardware thing even starts to slow down.
And again, I think that's why Goldman Sachs and the headline of today's show, bears turning into bulls. I think that's what we're seeing. If they believe this hardware infrastructure play to make sure AI becomes real, which then goes down to the software companies, is going to take several years, you just can't bet against Broadcom, ASML, AMD, Nvidia, Oracle, et cetera, because they're providing all the infrastructure.
But you would say this is all to be expected where we are. We're on plan right now. Everything there's no trouble signs yet from what you're seeing. It is different, right?
It is. And I think, we asked this question, what's different now? Because there's a lot of things that rhyme when we see these technologically driven booms and bull markets. There are things that rhyme with the dot-com boom of just 25 years ago. But I think there are things that are different now, too. And I think the thing that is particularly different here is that machine intelligence is almost entirely reliant on compute. It's entirely reliant on infrastructure, and it sort of scales linearly right now. So the more infrastructure we build, the more data that we're using in our models, the smarter that our AI gets. And until that paradigm changes, it's kind of hard to see why this hardware would slow down, because ultimately the biggest companies in the world have a lot of money to spend. And if they can create artificial general intelligence, it will be a huge win for them.
So if you are totally sold on AI and in the future, is it too late to buy Nvidia, or do you think you should look at, down the food chain a little bit for something that's not, that's undiscovered relatively?
It's hard to find the undiscovered one purely, Joe, but we have been trying to look a little bit more down the food chain. I mean, two names down that food chain that we do like are Arista, ANET. They just had some positive commentary related to Broadcom's strong earnings last week, where there's good adoption trends for Ethernet in data centers, and Arista makes switches that would be directly beneficial to that. Vertiv, VRT is another name. They make liquid cooling solutions for data centers. And when you think about how will AI evolve, chips will get faster, they will draw more power, and they'll need unique cooling solutions to handle the heat that these chips throw off. Vertiv offers a solution for that. So I think if you look down the chain and you can find companies that still have these catalysts that maybe haven't been fully realized yet, that's the way to play hardware.
What's really interesting there, and that's kind of similar to the energy trend that we've been talking about. Look at those two stocks he named. So Arista up 44% year to date. And then you got Vertiv up 93% year to date. It does look like there's going to be broader proxy plays that are necessary to be able to fulfill the demand that AI is creating, particularly Nvidia with the GPUs and infrastructure. That's why Dell is going up, SMCI is going up. And that's going to be beneficial for a variety of companies. So again, I bring that up to say, I keep seeing continued evidence that the AI infrastructure build out that is happening, and then the AI software in terms of productivity as a byproduct, increases in productivity as a byproduct of what AI's impact on the enterprise is having, leads me to believe that earnings should reflect that from the hardware companies and from the software companies and from every other company like Klarna, which uses buy now, pay later, that's using ChatGPT to replace a lot of their customer service employees because AI can do it better. Like in every sector, it's continuing to show momentum. And so you got to ask yourself, why would someone sell off that market, or why would the broader market fall 30% when that is happening and it's in the early innings of that happening? It's just hard to believe what would be the case. The only argument is, well, the macro data is bad, but the macro data is becoming really good. The inflation data is becoming exceptional, dude. The PPI was negative 0.02% year over year versus plus 1% on Thursday. So it makes sense. I'm trying to make sense why Evercore, Goldman Sachs, JP Morgan, Bank of America are raising their targets. And I'm trying to figure out, are they full of crap and they're all stupid and they're just calling the top, or do they have a legit argument? And the more I look into it, it's like, no, it feels like there's a legit argument here for what's happening. Super nerds custom building water cooled PC is about to be in high demand again. Yep. It just doesn't seem like it's stopping anytime soon, dude. And again, GPT-5 is not even out. GPT-5 is not like we're still on GPT 4.0 or that new model they released a couple of weeks ago. Like it's going to get even crazier. Blackwell revenue has not even hit Nvidia's books yet. It just seems like there's a lot that's going to happen. Now, one quick stat for you. So first of all, two things. I told, what's his name? I told TJ to buy 500 shares of Nvidia. So you guys know he's letting me manage 500 grand of his money. I told him last night and he did it. 500 shares of Nvidia. We're going to sell covered calls on Nvidia for like a $31 or $32 strike for July 19th. And we're going to collect around a 6.5% premium. So I've been looking at Intel for a long time now. And I think Intel's stuck in a range. So one idea for people to explore, Intel is not going anywhere, $128 billion market cap. The only reason they're down year to date is because their foundry business, which is their competitor to TSMC, is not going to be profitable for the next 4 or 5 years. Investors have kind of accepted that. The stock has fallen from about 44 to 30. It bottomed at $25.14 in 2023. I think if it gets back there, it's an immediate buy the dip, because Intel's not going anywhere. Intel is too valuable. Intel, to me, is not really a value trap. Now, if you're expecting like 50% gains in Intel, yeah, you're not going to get that. But if you wanted to consolidate in a range with decent premiums, I think Intel is a pretty decent stock when I was looking at the covered call premiums last night. So we spent 15 grand on Intel. We probably want to get that to about 2,000 shares over the coming weeks, but that's a starter position, 500 shares on Intel, and we're going to sell covered calls on that one for July 19th. So that one is stuck in a range, and I think that one will be interesting to see where it turns out and how it continues to go from there. Okay, so that was Intel, and I was going to pull up one more thing. Robinhood right here, 22.23. So it just bounced from 21.87. So that's a nice bounce on Robinhood from 22 to 20 or 21 to 22. And then I was going to pull up one more thing. What was I going to pull up? HIMS is still up 5%. Let me see if I saved it. Oh, yes. This is what I was going to say. So Taiwan Semiconductor, because we were talking about Taiwan, they are planning to raise the price of their 3 nanometer chips by over 5% as well. So TSM, let's see if that's helping the stock today. Yeah, look at that. That's up 1.49%. TSM now $908 billion market cap on TSM. That is $92 billion away from going to $1 trillion, which I think you have to make an argument TSM enters into the Mag 7. I mean, I think like TSM is the most important company on the planet, you could argue, outside of Nvidia. Maybe there's an argument when it's in the $1 trillion club, maybe deserves to be there. But TSM raising the prices on their chips, and the market's going to pay that because, I mean, they have no choice. That is going to continue to expand multiples on TSM, and that's going to help the broader market as well. PayPal. So what do we have on PayPal? PayPal right here, we have 59.96. Wow, PayPal is down below 60. There you go. PayPal and SoFi. SoFi is a little green today, 647. PayPal is down. I don't understand why the market's selling off PayPal outside. I mean, Apple Pay is not a reason I think to sell off PayPal. I think this is really stupid by the market. So if you're long PayPal, I don't think, options are going to be tough because you never know when it's going to bounce. But if you're just long PayPal, I don't think it's the craziest thing in the world. They're buying back $5 billion worth of their stock this year. I think next earnings will help it. But now if next earnings, even if we bounce to 65, that'll be great. But like we were at 65 for like 3 weeks and we almost got to 75. And so this one's just, it's a broken stock. It's not a broken company in my opinion. But PayPal's down. Apple at 215, Microsoft at 442, ARM at 156. That's down 1%. Costco 858. That's up. Starbucks is up a little bit. Oracle is up. Dell continues to go up. Spotify 316. They also raised prices last week as well. CrowdStrike here at 385. Now in the S&P 500. Uber at $70. And then Intel here at $30.26. Amit, what is the best app for a beginner trader? I think Robinhood is a great app, but I also think MarketWatch. You can do paper trading on MarketWatch. So if you go to MarketWatch and sign up for a free account, you can like start trading with like fake money, and that also helps you get into it. But I think Robinhood is like the best app for a beginner trader. PayPal just lacks a moat. I mean, look, I heard the argument that I could even give sympathy to the argument that PayPal doesn't have a moat, but it's undervalued, dude. And it's like at some point, the market is pricing in 0% revenue growth and 0% free cash flow growth for the next decade at $59, which is just like, it's just, I think PayPal is going to grow close to 9% every year for the next decade versus, or at least 7 to 8% versus 0. GameStop at $27.94, S&P at 542, Google right here at 176, TSM at 175 on the day. Gail says right here, dead money is good if you're wheeling it with good premiums. Yeah, that's the other thing about PayPal and Intel that we like. Shout out to TJ. He's in the chat. If Intel is dead money, but there's good premium, same thing with PayPal, then it's not the worst situation at all to look into. But Palo Alto is up. Wow, we haven't looked at Palo Alto in a minute. Palo Alto 319. Yeah, there you go. Wow, Palo Alto, it actually fell after their earnings. It bottomed at 275. Now it's back to 318. Nancy Pelosi did load the boat on that one, so continuing for that one to gain momentum. Okay, let's play another clip right here, continuing to hammer the point around AI creating a bull cycle. I want to see how a lot of strategists think about this, but let's hear from another perspective and continue to see what they're saying.
More on the markets. Let's bring in Mona Mahajan. She's senior investment strategist at Edward Jones, and you are positive. You think bull markets last longer than bear markets. Are we halfway through? Are we a third of the way through?
Yeah, it's a good point, Joe. Look, if history is any guide, we ran the numbers recently. The average S&P 500 bull market lasts about 5.6 years. It's up 192%. Even if you take out the last two big ones, 4.3 years and 125%. We're about a year and a half into this bull market and up about 50%. So, history tells us we could have some time. We could also have some price appreciation on our side. Not going to go up in a straight line higher. We know that. But do we use that volatility to our advantage and use it for opportunities to invest in better parts of the market? Absolutely.
Let me switch to Dan Ives. He's on CNBC right now. Let's see what he has to say.
500 to 550. So the Goliaths, they win. Yeah.
It's just, in my opinion, the AI party, it's 9 p.m. in the party. I think goes to 4 a.m. Because as everything we're seeing from a software and demand perspective, the use cases, now it's all starting to play out. And what I can tell you from all of our checks on Microsoft partners and customers, they're lining up. And that's bullish for Microsoft. It's bullish for second derivatives, ServiceNow, Palantir, and others. And of course, led by Godfather of AI, Jensen, Nvidia. And Carl, in my opinion, it just speaks to our bullishness. Well, I think this tech bull market continues well in 2025.
Where do you think the biggest threat then is? Is it from regulation or something else?
Look, the biggest threat is the China. Because when you think about U.S.-China, call it cold tech war, that maybe longer term is the biggest threat. But for right now, someone spends a lot of time in Asia. I view it as a contained threat. And I think it started off as semis and obviously led by Jensen and Nvidia. But now what's starting to happen is the demand and the use cases, the multiplier. We think for every dollar spent on an Nvidia GPU, the new oil or gold, there's a $4 to $5 multiplier across tech, which is why I believe this fourth industrial revolution, this 1995 moment, is now playing out, but not a 1999 moment. I think it'll last for another 2 to 3 years.
I cited you this morning, 9 a.m. party.
Well, I think it's 9 p.m. going to 4 a.m.
It's 9 p.m. Right? Okay, because we were questioning what kind of party started at 9 a.m.
Well, because look, because to some extent, when you look at where we are, this is just now starting to ultimately play out from a demand perspective. And I think the important thing is that of course, it's been led by Nvidia and what we've seen, but now what we're seeing across our checks around the world, that AI revolution is playing out in software. And I think ultimately it's going to play out in numbers because those numbers are going to go higher for 2025.
Are you referring to this notion that hardware is beginning to eat software or make it easy to start a software startup with minimal engineering?
Look, and Sarah will be talking to Dell, but I think it just speaks to, if someone told you Dell was an AI play 6 months ago, they'd say, what are you talking about? But look where we are now. Look at Oracle. And I think what you're really seeing now is it's hardware, it's software, but it's really creating a renaissance of growth for all these install base. That's why look what's happened in Oracle. Look what Nadella and Redmond are doing to Microsoft. And of course, you'll have air pockets, just like we saw MongoDB, Salesforce.com. But I view those as air pockets in an AI revolution that's complicated.
But are they all AI winners?
Not at all. But I think you will have winners and losers. I think over the next 6, 12 months, we sit here and be like, winner, loser. Do they get acquired? Does the board have to ultimately, has the clock struck midnight? So you're going to see a clear winner and losers playing out. But that's why this Game of Thrones arms race that's playing out, it's happening across tech, from Dell to Cisco to Microsoft to Oracle.
Wait, who's the loser?
Well, I think when you look at losers, you look at like, okay, where does Cisco play? That's why Cisco does Splunk, because that's an aggressive deal in terms of where they're looking. You look at SAP, what they're doing versus Oracle. Is Oracle the winner? I think for now, Oracle is. And then I think it's a lot of the when you talk about losers, a lot of the niche software platforms, as the strong get stronger, those are really the ones that ultimately start to actually see, I think, demand erosion, and they're gonna be facing some tough decisions. Do they consolidate, or where are they headed?
Was the Adobe scare for real, or this last few weeks, right? Questioning the model.
Yeah, I think we're heading into. I think there's definitely unknowns, and I think for a lot of the big software companies, you look at Adobe, you look at Oracle, you look at Microsoft, they're going to have to adjust. They're going to have to pivot. But when I look at Adobe's an example. One, you saw some air pockets, then you saw strength. I think we're going to continue to see some of these up and downs. Many saying Salesforce.com, look at that air pocket. I view that more as an air pocket, and Benioff will be able to ultimately monetize that install base. But that's why install base is so important. Look, there's many skeptics valuation, but as I always say, many are trying to find this AI revolution from the 10th floor of the New York City office building or in their spreadsheets. You got to see it around the world. That's what we do.
Yeah, you are a road warrior. I'll give you that. It's good to have you. Thank you, as always, Dan Ives.
Up next, check out this mystery chart.
So Dan's bullish. Dan continues to be bullish. I mean, look, we got to give him credit, right? Dan was, I think, the first person really saying, hey, this is 1995, not 1999. And the market's reflecting that a bit. Nvidia's down a little bit right now, about 1%. Robinhood 2216. Celsius continues to fall, 57.34, down 4%. Snowflake's down. AMD is down 3%. HIMS, $25. Just incredible, dude. Just incredible for HIMS. Google at 177. Disney at 101. And then PayPal below 60. Pounds are trying to break out, 23.78, trying to get back to 24. Touched it, then it came right back down. We'll see if it can get to that level. All right. I think that's pretty much it, guys. We'll do word of the day. But yeah, I mean, market's kind of flat today. Not that exciting. I kind of wonder how the rest of June ends up. Feels like it might just be kind of boring. Oh, hold on. There's one thing I want to show you guys. Speaking of China, this is the one thing I forgot to show that I was going to show right after we talked about Intel. China's got to get their shit together. Here's why. China new home prices in 70 cities decreased by 4% year over year in May, the most since June 2015, and the worst decline since April, or a worst decline by 800 basis points since 3.1% in April. This was the 11th consecutive month of decline, despite China unveiling a broad real estate rescue package last month. So, a couple of things on China. Either they've got to create more abilities for citizens to accumulate wealth, which might mean unbanning Bitcoin. They have to actually free up their society so there's more attractive investment capital coming into the equity markets in China, into Baba, JD, Pinduoduo, all those companies, because people aren't afraid that the CCP is going to ruin stuff. Or they have to create even more stimulus, whether it's in the form of opening the reserve ratios for banks, which they did 3 months ago, or just creating new potential incentives for people to buy a home. Because a majority of the middle class in China has their wealth in homes, and home ownership, or the home prices in general in China, have declined for 11 months straight. So China's struggling right now, which again is kind of good, because maybe it means they don't invade Taiwan because they're struggling so much they have to figure their own shit out. The opposite is that they invade Taiwan because they want to unify the country around some type of common purpose. If everyone's broke, and like that gives them a common purpose so that people don't have to worry about how broke they are. It could go either way, but China's got to get their shit together. They just have to get their shit together. Otherwise, it's going to be tough for them to do what they need to do. All right. So word of the day. And we'll end it off there. This is an interesting one. Duplicitous. Wow. I got that one right. Okay. Marked or characterized by duplicity. All right. I hate when websites do that because we don't know what the hell duplicity is. So let's look up duplicity. Duplicity is deceitful, double dealing. He was accused of duplicity and branded a traitor. Okay, so when you're duplicitous, you're essentially a traitor. The politician's duplicitous promise left voters wondering if he had taken acting lessons. My duplicitous cat was purring sweetly while secretly plotting to knock over the vase. Interesting. So if you are basically a traitor, or if you're trying to trick someone, essentially, you are a bit more duplicitous. You know what was duplicitous when I bought it at $4.56? Because you guys told me it was a great deal. Rocket Lab. This thing, we're already down 50 cents a share on freaking Rocket Lab at 424. Again, my opinion on Rocket Lab, dude, it's going to take a long time for that thing to play out. So if anyone buys it, you just got to be in it for a long haul. But yeah, it was duplicity at 450 because then it came right back down to 425. All right. I think that's it for me. So 12:30, guys, we'll be back for that GameStop meeting. I really do want to stream it and see what they have to say. Not expecting anything that exciting for it, but yeah, I'll be back at 12:30. We'll stream that. That's probably going to be like an hour, and then we'll do market close after that. But yeah, we'll be back in about 2 hours, stream what GameStop has to say. We'll see if it has any impact on the stock. If they address the fact that Roaring Kitty is a shareholder and like they acknowledge the craziness that's happened, or if it's going to be kind of boring. We'll see what ends up happening. All right, that's it for me. I'll be back in 2 hours. Hope everyone had a great Friday. We're back with another week of the market open. Also, by the way, I think you guys remember, you saw that video on Twitter that I posted with my grandpa, who's making like $2,500 a week in options trading, like selling puts and calls. I'm probably going to his house on Friday and likely going to be recording a podcast with him. So for everyone who wanted to learn his strategies and like get in depth, I think I'll probably go live with him probably like 8 p.m.-ish on Friday, maybe 9 p.m. And we'll talk all about how he's making money with selling options in the markets. And we'll go from there. All right, cool. I'll see you guys in 2 hours. Have a good one. Bye, everyone. See you in a bit.